Well, good morning, traders, and certainly lots to report. It's a fairly flat lead for the market today here in Australia. We're calling the market, around 59.20 at the moment. So, we're certainly going to be up on the week, which the bulls will take. And, we're still owning and eyeing that move through the 59.50, which is the recent high. And then potentially we start looking at 6,000 again. But the real after hours action has happened in the NASDAQ stocks. And the NASDAQ, if you want to be bullish on an index at the moment, clearly that's the place to be. That's the index, I suppose, which has got the most upside momentum. And you can clearly see why. I mean, we've seen earnings coming from Alphabet. Really strong numbers. The stock's up over 4% in the after hours. You've seen Amazon coming out with some pretty good numbers there as well. That chart looks really good. The stock up 3.3% in the post-market session. A little bit of weakness coming into Intel's share price, and they've come out with some fairly poor numbers relative to expectations. Microsoft as well down a touch in the post-market session. But ultimately, you've seen 47% of NASDAQ companies coming out and reporting quarterly earnings thus far. 87% have beaten expectations on the EPS line. 65% have beaten on the sales line there, and the EPS aggregate growth has been around 20.9%. So really strong earnings growth coming from these NASDAQ companies, and that's been the index of choice for the bulls to express a bullish view on holding equity. There's a lot of focus in tonight's session, not just on the GDP print that comes out, I believe, at 10:30, where the market's looking for 1% growth. Recall the Atlanta Federal Reserve come out with their own model, and that's at 20 basis points or 0.2%. The analyst ranges anything from 2.2% down to 0, so that may get some interest from the market, especially around the US dollar. But I will say it's a bit of a backward-looking indicator, so I'm not really giving too much impetus, especially when we know that in the second quarter in the US we're expecting a strong rebound to around 2.5% to 3% growth coming through there, driven by stronger personal consumption. So this number is expected to be weak, but we're expecting a nice rebound there. So I wouldn't get overly bearish on the fact that we're going to see quite a weak print here as well. If we have a look at what's happening in tax reform, there's been a lot of talk about a potential healthcare bill being pushed again by Paul Ryan and the Trump administration. From all accounts, they're getting a more favourable stance from this now notorious Freedom Caucus, who are looking to potentially vote this through, something obviously they didn't do last time around. But now they've lost, by all accounts, the more moderate Conservatives, and they may not get the vote. So 216 votes needed to pass healthcare. If they pass healthcare, of course, that gives them an ability to then pass these other spending measures, which we've been talking about the last couple of days, including taking that corporate tax rate down from 35 to 15%, amongst other measures, of course. But without spending cuts coming through for the Obamacare changes, they're really not going to be able to push through spending measures without increasing that deficit by a dramatic amount, and that's quite an interesting concept. Euro dollar's been pushed down a touch. We've seen Mario Draghi coming out with a more balanced view on economic risks coming forward, and that's an upgrade, but they certainly haven't met the market's forecast where they were looking for a potential tapering announcement in the June meeting. I think that markets push that back a little bit to September now, and they'll start tapering through in their QE program in January. But certainly that's pushed the euro dollar down a bit. So a lot to look out for at the moment. We're calling the market fairly flat. BHP's ADR down 1.8%. We're expecting banks to hold in firm based on the fact that next week we've got earnings coming from the banks, and that's one definitely to watch there.